Welcome back. I'm Pratap here. Today is the 10th December 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, please click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You will get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just scroll down to the bottom of the page. Here starting from lesson 1.1. All the lessons are placed in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be useful to you. Now let's get into the analysis discussion. Yesterday, end of the day report, we identified 6 high liquidity zones from daily and 75 minutes time frame. And the first one is Laurus Labs. We got an aggressive trade from Laurus Lab because this is the zone created in the year 2022. So we won't be having 5 minutes data to fine tune. But in the recent price action, have you noticed? This was yesterday's candle. And in this candle, institutions created a high liquidity zone. The 5 minutes high liquidity zone. This is not a fine-tuned zone. Actually, yesterday we analyzed the stock. But we analyzed the stock before we got the data, yesterday's data, end of the day data for 5 minutes data. Before that we analyzed. After we got this end of the day data, when I looked into this 5 minute zone, here you see, yesterday's 5 minute zone. It was created yesterday 9:12 at 9:20 candle, after that one base candle, and this is a high liquidity zone, 5 minutes high liquidity zone, R_SZ. And today, this can be used as an aggressive trade setup. Let me directly go to the 5 minutes time frame. See here we have a drop, base, drop. This is morning 9:20 candle as a leg in, after that base candle, and then we have a leg out candle. So morning 9:20 candle, 9th December 9:20 candle is the leg in. That is what we are seeing here. On 9th morning 9:20 candle is the leg in, one base candle, and then leg out candle 9:30 candle. And this is the type 2 proximal level we fine tuned so that risk will be managed in a better way. See here, already yesterday it tested several times, multiple times. And today we got the trade from this candle, morning 9:15 candle, but this is not 9:15 1 minute candle. The actual trade we got on 9:16 candle. Because 9:15 candle, there are higher chances our trade execution might be missing. But look into these 1 minute candles. This is the morning 9:16 candle. Prices went and your order definitely would be executed because it went a little inside and sharply came down. And finally reached its 15 minutes demand zone target. Go to the 15 minutes time frame. In the 15 minutes you have rally, 2 base candles and a rally candle. The prices reached up to this 15 minute zone. When it reached the 15 minute zone at 13:15. So almost 4 hours you have to be on the trade to get this 15 minutes target. I know some of you might be executed after 1:3 RR or 1:5 RR. Some of you might be using trailing stop after reaching 1:3 RR, and you may get more profit. Some may wait up to 15 minutes target zone. Patience is required, waiting for 4 hours. So these are the different ways. But maximum, what is the profit our software, our concept has given? Software identifies high liquidity. Rest everything you have to fine tune, you have to identify aggressive trades. And once you take the trade, it is your patience level up to how much time you are waiting. They're all different things. But our concept point of view, what is the maximum target it has given? Till 15 minute zone, has it given that reached? Yes. So that way we are capturing our data. So how much profit it has given? So Laurus Labs has given 14,195 rupees profit, which is 7.2% ROI as per one futures margin cost. This is a 5-minute HLQ supply zone, aggressive trade setup inside the daily HLQ zone. So how powerful these HLQ zones? But the only problem is, if anybody would have guessed this based on multiple tests, probably you might have planned for an aggressive trade setup, or otherwise our NeoStock software supply demand zone chain. At present you don't have access except Nifty and Bank Nifty. Everyday reports you are having access to Nifty and Bank Nifty supply demand zone chain from monthly time frame to 5 minutes time frame. All the time frames you are getting the chain, so that it is useful to the Nifty Bank Nifty traders. Okay. So this is about Laurus Labs aggressive trade setup. Next one is M&M. M&M already we discussed yesterday how we fine-tuned this zone, the daily zone. Yesterday we identified these two order flows. Please look into yesterday's video. Here this 75-minute zone, proximal line we have an order flow, at the distal line, that is lower time frame zone, as an horizon. So we got two trades. First trade is stopped out completely, and the first trade you would have got 700 rupees loss, that is 0.6% negative ROI. But second trade, you see, it looks like the zone is pierced and then sharply moved, it would have given a good profit. But actually the biggest problem is here, look into the blue color line I have drawn. That is the stop buffer. Of course some people can take stop buffer beyond this, depending on our risk management. This is the minimum stop buffer, but generally we use this stop buffer. Those who extended, maybe you would have got profit, but generally we consider the stop buffer that is suggested by our software, because every day, end of the day, HLQ zone reports I am publishing stop buffers. The last 1-2 minutes of your video, you can find stop buffers every day. After adding the stop buffer, you got this blue color line, and see the price slightly crossed the blue color line. That means it hit the stop loss. Of course, beyond the blue color line, your stop loss line, prices went 15 paisa above, 15 paisa, and then sharply came down. But you might have exited before that. Before prices are reversing, you might have exited your trade. You might have book the loss because it hit the stop loss. What is our stop loss value? 288.90 paisa. I think 23 is the stop buffer, rounded value 25. So 288.90 paisa. But prices went up to the high of this candle, 289.5 paisa. Still loss is a loss. We have to accept that. Just only 15 minutes, only 15 paisa only difference. You can't consider this as a profit. Even 5 paisa, it went beyond your, your stop buffer value. You have to exit the trade. You never know. Okay, 15 paisa it went and came down. Who knows? If prices further moved up, another 1 rupee, another 2 rupee, another 3 rupee, how much stop buffer you can increase? You can't increase, right? There will be some threshold value should be there. This is the minimum threshold value as per our subject, because we are calculating 3%, right? 3% stop buffer for fine-tuned 5-minute zones. So that is the reason why you have to consider, even though the difference is only 15 paisa, still you have to consider this as a loss, because it hit your stop loss. Once it hit the stop loss, definitely you exit the trade, because you never know, after hitting the stop loss, you never know how much price will further move up. You never know. This is today is a special scenario. Immediately prices came and reached. Here you have a, see, 15 minutes target is here, but see here you have a 5 minutes target, rally, base, rally. If you exit here, because a lot of profit it has given by this time, even if you exit here, you would have got 10,000 rupees profit, which is 8.5% ROA. In case if stop buffer is a little above, if the stop buffer is a little above, you would have got a 10,000 profit, which is 8.5% up to this 5-minute zone. But unfortunately, your stop loss hit 15 paisa before, and you have to book your loss. So that's why M&M has given 1800 rupees loss, which is minus 1.5%. Suppose some people may feel the 1.5% is high, they can't bear. Maybe 1% is acceptable. Maybe those people a little inside, they would have taken the trade. So this is the entry I considered, 280 rupees. Something wrong. 288 rupees. The 288 rupees, maybe 288, 30 paisa or 40 paisa or 50 paisa, still price reached that level. You would have taken trade. Those who can't bear 1.5% risk. But anyway, we are calculating up to 2% risk level. But 1.5 or 1%, that is individual levels. How much loss you are willing to bear or you are willing to accept. So I am registering all the losses till 2% level. It is within the 2% level. I am registering this loss in our Excel sheet. 18,000 is the loss. So that way M&M has given two stopped out trades for us. Both the fine-tuned zones are stopped out. At the proximal level fine-tuned, at a distal level fine-tuned. Moreover, this is the origin. This 5-minute zone has an origin to the 15. Actually, origin worked, but the problem is before it worked, it hit our stop loss, including the stop buffer. That's the problem. But otherwise, it could have been a very good trade for us. But anyway, we have to accept this loss. So these are the two stocks. And let us look into the remaining stocks. HDFC Life. Today also, yesterday we discussed HDFC. Day before yesterday we discussed. And today also it did not enter into the fine-tuned zone. In the previous HLQ analysis videos, I explained how I fine-tuned. So please look into the previous videos. So today the price did not enter into the fine-tuned 5-minute zone. We didn't get the trade because so many days the prices are moving here only. Next one is Indus Towers. This is also daily high liquidity supply zone, this one. This Indus Towers 75-minute zone, we have a drop. You have 6 base candles, 1, 2, 3, 4, 5, 6 base candles, and then a drop candle. This is how our software identified this high liquidity zone. This one I fine-tuned with 75 minutes time frame. We have two 75 minutes order flows. The first one is a drop, 1, 2, 3, 4 base candles and a drop candle. You can also consider rally, 3 base candles and then a drop candle. Either way is okay. And also you have one more, this failed ERC candle is a leg in as a rally. You have 1, 2, 3, 4 base candles and again a drop candle and follow through candle. And both these 75-minute zones I fine-tuned with 15 minutes time frame, but both these 15-minute zones are origins. The lower time frame zone as an origin to higher time frame. See here you have a rally base drop. This 15-minute zone is the horizon for this 75 minutes fine-tuned zone. Earlier the leg out is picked up the orders from this horizon and came down sharply. And here also you have a rally candle, 1, 2, 3 base candles and a drop candle. This is another 15-minute zone horizon to this 75 minutes fine-tuned zone. Because both these structures, inside structures are not good. Here also the horizon sharply, it touched the horizon, sharply came down and followed through candles. Maybe strong order flows are there in these horizons. But you can't take in the 15-minute zone trade. We need to have fine-tuned 5-minute zone. If fine-tuned 5-minute zone is not there, the horizon is not having any importance. I repeat again. If the 15 minutes horizon is not having fine-tuned 5-minute zone, the horizon is not having any importance. The zone will be violated easily. Always remember. Previously also several times I told this point. Now go to the 5 minutes time frame. Do we have fine-tuned 5-minute zone inside that 15 minutes horizon? Yes. See here, rally, base, drop and follow through candle. This is the 15-minute zone, is the horizon for this entire. See how it is picking the orders. Sharply prices are coming down. Again moved up and again sharply prices came down. Again moved up. Again sharply how the prices came down. And previously here also again it touched the horizon and then sharply the prices came down. So that's why this is the area we want to plan our trade. But unfortunately today prices did not enter into that horizon. They entered into the zone but not into the horizon. And we have one more fine-tuned 5-minute zone. Here also. See you have a rally, base, drop. This 5 minutes, fine-tuned 5-minute zone is the horizon for this entire 75-minute zone. So this is the 75-minute zone which picked up the orders from this horizon. After that, see again, once again it picked up and prices came down. So these horizons, understanding these horizons are very, very important. They are always giving good profits to us. But today only one trade is stopped out because maybe the stop buffer is a 15 minutes less than what we expected. But otherwise that also would have gave good trade. But we were exited a little earlier due to our stop buffer. Okay. So this is about Indus Towers, Laras, M&M. We discussed next Navin Fluorine. Navin Fluorine is a 75 minutes high liquidity zone. See, today it is stopped out. We know this will be stopped out. How? How we know this will be stopped out? See, this is having a horizon. Even this is having horizon. How do we know this will be stopped out? Let us discuss. Now go to the, see first of all this is a rally base rally. Go to the 15 minutes time frame. There is no proper structure in the 15. Why there is no proper structure? Here you have a drop candle. You have a rally candle. In between there are no base candles. So we know the zone will be violated. But here we have an excellent rally base rally. And this rally base rally 15 minutes horizon. This 75 minute zone picked up the orders from this 15 minutes horizon and then moved. Definitely we have strong institutional order flows, right? Yes, we believe like that. But we should have a fine-tuned 5-minute zone. Otherwise zone will be violated. Go to the 5 minutes time frame. Now you will understand 5-minute structure is not good in the horizon. See here, this is a drop candle. How we say drop? At the hidden body. See, from the close of this candle, at the hidden body, this will be a drop candle, big drop candle. And then rally candle. And there is no proper horizon. Here rally candle, drop candle, rally candle. Again a rally candle. This is the base candle you may consider, but this is also somewhat looking bigger candle. But even if you consider, again this is a rally base drop. So where is the order flow? So that is the reason why we can say this zone will be violated easily. No 15 minutes structure in this area. All these are all large candles. No base candles are here. See today what happened? The price itself opened below the zone. Even if it is having some fine-tuned zone, still you can't take trade. The open itself below the zone. You can't place the orders. But anyway, we know that this zone will be violated because structure itself is not good within this zone. So that's why, because there is no proper structure, institutional order flow, the open itself is below the zone. After that it moved up. That is another reason, maybe other reason. Maybe somewhere here some order flows might have pushed. But not from our this high liquidity zone point of view. So anyway, Navin Florin, we didn't plan any trade because we know it will be violated. And the last one is Tata Motors. Tata Motors, we have good order flows. This is a 75-minute zone. We have very good order flows. I think previously we fine-tuned, they are all violated. Let me delete them. Unnecessarily, otherwise they will disturb our views. Okay. This is a 75-minute zone, Tata Motors. Our software identified drop, 2 base candles and a rally candle. Here you have good order flows are there inside. I went to the 15 minutes time frame. In the 15-minute structure, see here you have a rally, base rally, 15-minute zone. Again you have a rally, 2 base candles and rally. Here also you can draw actually rally, 3 base candles, this medium size candle part of the base, rally you can draw, but actually it picked up the orders from this origin. So that's why I haven't given much importance to this rally, base rally. Because this is the origin actually supported. Probably this is the area you should plan your trades. So that's why what I did, I went to the 5 minutes time frame. In the 5 minutes time frame, I fine-tuned with 5 minutes time frame. We have a rally. You have 1, 2, 3, 4, 5 base candles and rally candle. You can also draw, in case if you feel the risk is high, you can also draw like this. Maybe here the actual flow started from here. Flow means the movement. The movement started from here. Even though it is a medium size, it started from here. So that's why you can give importance to this area. If you feel this risk is high. But just for showing you how I fine-tuned, I am showing you. See, drawing zones is different. Actual risk management point of view, taking the entry is different. You may take entry inside. There is no rule that exactly how to take if the risk is high. Apart from that, there is one more drop, base, rally is also there. Drop, base, rally. So that means this area is having 2 order flows. This is the one and this is the second one. If first one is violated, you need to place orders again in the second one. If this is also violated, below you have one more order flow. We have another 75 minutes. Inside this, this entire thing is 75. Inside you have another 15 minutes. Inside 15 you have rally, 3 base candles, and rally and follow through candles. So this is also area where you can plan your trades. So this is about Tata Motors, how I fine-tuned these zones. But today price did not enter into the zone, we didn't get any trades. So this is about the high liquidity zones identified in the previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.